Welcome back to High Net Worth Living. Today, we're going to explore one of the most important principles in wealth management: diversification. For high net worth individuals, building and maintaining a diverse portfolio is crucial. It's not just about spreading out investments. It's about strategic diversification to safeguard wealth, reduce risk, and capture unique growth opportunities. If you're interested in learning how the wealthy approach portfolio diversification, from alternative assets to global opportunities, this video will offer valuable insights. So let's dive in. What is diversification and why it matters? To start, let's define what we mean by diversification and why it's so essential, especially for high net worth individuals. Diversification is the practice of spreading investments across various assets, sectors, and geographies to minimize risk. The concept operates on the principle that different assets react differently to market conditions, so holding a variety of them can help cushion a portfolio against losses. For high net worth investors, diversification is more than just a strategy. It's a necessity. Wealthy investors have more assets at risk and are often managing not just for themselves, but for future generations as well. As we'll see, strategic diversification protects assets while still providing ample room for growth. Asset classes as building blocks. Now let's look at the building blocks of diversification. Asset classes. At its core, diversification begins by allocating assets into different classes, each with its own risk, return profile, and behavior in the market. Here's an overview of the main asset classes that high net worth individuals consider for a well-diversified portfolio. 1. Equities, or stocks, provide growth and capital appreciation. 1. They tend to have higher risk but also higher potential returns. 2. Bonds and fixed income. These assets offer stability and income, usually with lower returns but also lower risk compared to stocks. 3. Real estate. Property investments are highly valued for their tangible nature and potential for steady income through rents. 4. Commodities. Assets like gold, silver, and oil can act as hedges against inflation and market volatility. 5. Alternative investments. This category includes private equity, hedge funds, venture capital, and other non-traditional assets that offer unique growth opportunities. Each of these classes plays a specific role, and balancing them correctly is the key to a resilient, high net worth portfolio. The role of stocks and equities in diversification. For many high net worth investors, equities remain an essential part of their portfolio. Stocks have the potential for high returns, and they allow investors to participate in the growth of companies. But the ultra-wealthy take a sophisticated approach, often investing in different sectors, markets, and even countries to further diversify within equities. Here's how they do it. 1. Sector diversification. They spread investments across sectors like technology, healthcare, consumer goods, and finance to capture a variety of growth trends. 2. International exposure. Billionaires often invest in global markets, which can reduce exposure to any one country's economic cycle. 3. Growth versus dividend stocks. They may balance high-growth stocks with dividend-paying stocks to ensure both capital appreciation and income generation. The ultra-wealthy also use hedge funds or private equity as ways to diversify equity investments, which we'll explore in more detail shortly. Bonds and fixed income for stability. Next, let's talk about bonds and fixed income assets. For high net worth individuals, these assets are a way to maintain stability and provide a steady income stream, especially when stock markets are volatile. Wealthy investors often have access to a broader range of fixed income options. 1. Government bonds. Highly secure, these provide reliable returns and act as a hedge against economic downturns. 2. Corporate bonds. These can yield higher returns than government bonds but come with added risk. 3. Municipal bonds. Tax-free. In certain jurisdictions, these bonds can provide attractive income for high net worth investors. Some high net worth individuals also explore asset-backed securities, such as mortgage-backed securities, for further diversification within fixed income assets. Real estate's strategic role. Real estate is a cornerstone of high net worth portfolios. Unlike other assets, real estate is tangible and can provide both income and appreciation. Here are a few ways high net worth investors use real estate to diversify. 1. Residential and commercial properties. While residential properties offer rental income, commercial real estate provides exposure to business sectors, which can enhance diversification. 2. Luxury real estate. This includes high-end properties that may serve as vacation homes or rental properties in luxury destinations. 3. Real estate investment trusts, REITs. These allow investors to gain real estate exposure without owning physical property, adding liquidity and flexibility. 4. Farmland and timberland. High net worth investors may also buy agricultural land or forests, which act as inflation hedges and tangible asset investments. By investing in a variety of real estate types, wealthy investors diversify their portfolios while generating multiple income streams. Commodities and precious metals. As an inflation hedge. Commodities and precious metals are another critical piece of a diversified high net worth portfolio. These assets act as a hedge against inflation and currency risk, which is essential for preserving wealth over time. Gold and silver are commonly held due to their status as safe haven assets. They retain value even during economic uncertainty, making them a staple in many portfolios. Oil and natural resources offer exposure to the energy sector, which can balance a portfolio during periods of inflation. For example, when commodity prices rise, it often benefits energy investments. Agriculture. High net worth investors may also invest in farmland or agricultural commodities, providing protection against inflation while supporting a steady demand-based asset class. Alternative investments for high returns. Alternative investments, such as hedge funds, private equity, and venture capital, are increasingly popular among the wealthy due to their high return potential and unique diversification benefits. Let's look at how each contributes to a portfolio. 1. Private equity. Wealthy investors use private equity to buy ownership stakes in companies, giving them control and a chance for substantial returns. 2. Venture capital. By investing in startups, they gain exposure to high-growth sectors, especially in technology and innovation. 3. Hedge funds. Hedge funds use advanced strategies like short selling, leveraging, and arbitrage to produce returns in various market conditions. These investments require high capital, but offer unique ways to capture growth outside of traditional asset classes, appealing particularly to high net worth individuals looking for uncorrelated growth. Art, collectibles, and luxury assets. For many high net worth individuals, tangible luxury assets like art, collectibles, and luxury vehicles serve as both investments and status symbols. They're unique diversification tools due to their non-traditional nature. Fine art. Wealthy investors often buy pieces that appreciate over time, adding both beauty and financial growth to their portfolios. Collectibles. Rare items, from classic cars to fine wine, can rise in value, providing a store of wealth and an inflation hedge. Luxury real estate and yachts. High net worth investors often diversify their wealth into ultra-luxury properties and even yachts, which offer enjoyment alongside appreciation. Global diversification. Global diversification is a priority for high net worth investors looking to protect their assets from localized risks. They achieve this by investing in 1. International real estate. Properties in diverse locations provide currency diversification and exposure to various economies. 2. Foreign stocks and bonds. Investing globally allows them to benefit from growth outside of their home country's economy. 3. Global funds and ETFs. These funds spread investments across global markets, reducing reliance on any one country's performance. Global diversification adds a layer of protection while enhancing growth potential through access to foreign economies. The importance of active diversification. In conclusion, diversification is critical for high net worth portfolios, not only to reduce risk, but to enhance growth and protect wealth. It requires strategic planning, with consideration for asset classes, geography, and industry sectors. Thank you for watching. If you found these insights valuable, don't forget to like, subscribe, and share. Diversifying like the wealthy isn't just about what you invest in, it's about how you think about risk, growth, and opportunity. Until next time, happy investing!